Every second, invisible armies of synthetic identities and automated bots probe the perimeter of the global financial system, searching for a single vulnerability to exploit. You are no longer fighting isolated hackers. You are defending your enterprise against industrialized, algorithmic fraud syndicates capable of draining millions before a human analyst even opens an alert. The cost of this war is staggering, with financial institutions hemorrhaging capital not just from direct theft, but from the crushing manual overhead of regulatory compliance required to prevent it. If your risk management strategy still relies on static rules and manual reviews, you are bringing a ledger to a drone fight. JPMorgan Chase recognized that traditional defense mechanisms were mathematically incapable of scaling to meet this exponential threat. They engineered a radical transformation, weaponizing artificial intelligence to fundamentally rewrite the rules of fraud detection and compliance automation. By deploying advanced machine learning models across their colossal data infrastructure, they shifted their entire security posture from a reactive cost center into a predictive strategic asset. This is not just a story about stopping criminals. It is a masterclass in leveraging AI to dominate a highly regulated market. The financial services industry operates under a suffocating blanket of regulatory scrutiny, where a single compliance failure can trigger billions in fines and catastrophic reputational damage. Historically, adhering to these shifting global mandates required armies of compliance officers manually auditing transactions, a process inherently plagued by human error and glacial processing speeds. The sheer volume of cross-border data rendered legacy systems obsolete, drowning risk teams in an ocean of false positives that alienated legitimate clients and obscured actual threats. To break this deadlock, JPMorgan Chase deployed deep learning algorithms capable of ingesting and analyzing transaction data in milliseconds. These proprietary AI models do not just look at isolated data points. They map complex, multidimensional behavioral patterns across billions of daily interactions. By establishing a baseline of normal client behavior, the system instantly flags microscopic anomalies, whether it is a sudden wire transfer to a high-risk jurisdiction or a login from an unrecognized device, executing a real-time risk assessment before the transaction clears. This shift to behavioral biometrics and real-time anomaly detection effectively neutralized the advantage of speed previously held by cybercriminals. The AI infrastructure acts as an autonomous immune system for the bank, learning from every blocked attack to fortify its defenses against future unseen variants. Your enterprise must understand that the true power of this technology lies not in replacing human judgment, but in augmenting it, allowing your security analysts to focus on complex threat hunting rather than mundane triage. The financial and operational returns on this AI integration are monumental. By drastically reducing false positives, the bank reclaimed hundreds of thousands of hours previously wasted on dead-end investigations, directly lowering their operational expenditures. Furthermore, the frictionless experience for legitimate customers, who no longer face arbitrary account freezes due to clumsy security protocols, translates directly into higher retention rates and increased lifetime value. Yet, training algorithms to achieve this level of precision requires an astronomical amount of high-quality data, presenting a massive internal hurdle. Financial data is notoriously siloed, fragmented across different legacy systems, and heavily protected by strict data privacy laws. Simply feeding raw, unstructured customer information into a machine learning model is a recipe for regulatory disaster and catastrophic bias. The leadership at JPMorgan Chase tackled this by architecting a rigorous enterprise-wide data governance framework prior to scaling their AI initiatives. They implemented federated learning techniques and synthetic data generation, allowing their models to train on the mathematical patterns of fraud without ever exposing sensitive, personally identifiable information. This meticulous approach to data architecture ensures that their AI applications remain strictly compliant with global privacy regulations while still extracting maximum predictive value. In the highly regulated banking sector, deploying a black box algorithm is simply not an option. Regulators demand absolute transparency. If an AI model denies a transaction or flags an account, the institution must be able to explain exactly why that decision was made. To satisfy these stringent requirements, the bank invested heavily in explainable AI. developing models that generate clear, auditable decision pathways alongside their risk scores. Mastering model explainability transformed a severe regulatory constraint into a massive competitive moat. While smaller competitors struggle to justify their automated decisions to auditors, JPMorgan Chase can instantly produce comprehensive, machine-generated compliance reports that satisfy regulatory scrutiny. This capability dramatically accelerates the approval process for new financial products, allowing them to capture market share while rivals remain bogged down in compliance red tape. This operational velocity is compounded by the sheer scale of the bank's data network effects. With trillions of dollars flowing through their systems daily, their AI models are continuously trained on the largest proprietary financial dataset in the world. Every transaction refines the algorithm, creating a self-reinforcing loop of intelligence that makes their fraud detection capabilities increasingly insurmountable for competitors lacking the same volume of data. The battlefield, however, is continuously evolving, with the rapid proliferation of generative AI arming fraudsters with unprecedented capabilities. Criminal syndicates are now deploying sophisticated deepfakes, voice cloning, and synthetic identities that can easily bypass traditional biometric security and KYC protocols. The threat matrix has expanded from simple stolen credentials to entirely fabricated corporate entities capable of passing standard human verification. Anticipating this shift, the bank advanced its defensive posture by deploying adversarial neural networks specifically designed to hunt generative AI fraud. These specialized models are trained to detect the microscopic digital artifacts and synthetic patterns left behind by deepfake generation tools. By fighting AI with AI, they maintain their defensive perimeter, ensuring that even the most convincing synthetic identities are flagged and neutralized before onboarding. Beyond fraud detection, JPMorgan Chase is aggressively scaling large language models to conquer the crushing administrative burden of regulatory compliance. They have integrated natural language processing tools capable of instantly parsing thousands of pages of dense, ever-changing global financial regulations. These AI agents cross-reference new legal mandates against the bank's internal policies, automatically highlighting compliance gaps and drafting necessary protocol updates for immediate review. The automation of regulatory mapping has effectively eliminated one of the most resource-intensive bottlenecks in corporate finance. Legal and compliance teams are no longer forced to manually track shifting mandates across dozens of international jurisdictions. This AI-driven efficiency has slashed compliance costs by millions of dollars annually, proving that intelligent automation can simultaneously enhance regulatory rigor and drive massive bottom-line profitability. Achieving this level of enterprise-wide automation required a profound cultural shift, driven aggressively from the C-suite down. Executive leadership mandated a transition from a traditional, risk-averse banking mindset to an agile, AI-first engineering culture. They recognize that successfully scaling artificial intelligence is not merely a technology procurement issue. It is a fundamental redesign of human workflows and corporate decision-making. Even with strong leadership, deploying these advanced models globally introduced severe operational friction due to fragmented international laws. A fraud detection model optimized for North American compliance standards might inadvertently violate strict European data sovereignty regulations. Navigating this geopolitical maze threatened to stall the global rollout of their most effective AI tools. The architectural solution was to build a modular, localized AI deployment strategy. Instead of forcing a single, monolithic model across all regions, they engineered localized algorithms that operate within specific geographic data boundaries. These regional models adhere strictly to local compliance mandates while still feeding anonymized, high-level threat intelligence back into the central global network. This decentralized AI architecture allows the bank to execute cross-border transactions with unprecedented speed and security. Automated risk scoring evaluates international transfers in real time, instantly clearing legitimate capital flows while isolating suspicious activity for localized review. This capability provides multinational corporate clients with the liquidity and speed they demand, cementing the bank's position as the premier partner for global enterprise. The ripple effects of this technological leap are actively redefining the baseline for the entire financial services industry. Clients now expect instantaneous transaction clearing, zero friction security, and flawless regulatory execution as standard features, not premium upgrades. Institutions that fail to match this AI-driven standard are rapidly losing market share, viewed by corporate clients as operational liabilities rather than strategic partners. To maintain this dominance, the bank implemented rigorous continuous learning protocols to prevent model drift in volatile financial markets. Economic shocks, shifting consumer behavior, and new regulatory frameworks can quickly render static AI models inaccurate. By establishing automated feedback loops, their algorithms constantly recalibrate against real-time market data, ensuring their predictive accuracy remains razor-sharp regardless of macroeconomic turbulence. The ultimate validation of this massive AI investment is the seamless, invisible protection it provides to the end user. Corporate treasurers and institutional investors experience a frictionless banking environment where complex transactions execute flawlessly, completely insulated from the silent, algorithmic war raging in the background. This unparalleled customer experience translates directly into deep, unshakable client loyalty. The endgame of this technological evolution is the creation of a fully predictive, autonomous risk management framework. We are moving toward a future where AI does not just flag compliance violations, but actively restructures transactions in real time to ensure adherence before a breach can occur. This proactive, self-healing infrastructure represents the pinnacle of enterprise security and operational resilience. Your enterprise must extract a clear, actionable blueprint from this success story. You must first consolidate and sanitize your data infrastructure, as AI is useless without a flawless foundation of truth. You must prioritize model explainability from day one, ensuring your automated decisions can withstand the harshest regulatory audits. And most importantly, you must empower your teams to leverage these tools not just for cost reduction, but for aggressive market expansion. The strategic deployment of AI for fraud detection and compliance is no longer an experimental luxury. It is the fundamental prerequisite for survival in the modern business landscape. JPMorgan Chase has proven that when artificial intelligence is integrated with strategic intent, it transforms the heaviest operational burdens into decisive competitive advantages. The tools to automate your defenses and scale your dominance are available right now. The only remaining variable is your strategic resolve to deploy them.